Hello and welcome back. This is David from the Personal Finance Squad. Hello and welcome back. This is David from the Personal Finance Squad. We are in Creating the Budget Exercise 8, Flexible Spending Account. So this is one of those that we like because it's pre-tax income and that puts more money in your pocket and not someone else's. Now we want to point out that flexible spending accounts typically start at the beginning of the year for the employer that you work for, and it's also if they actually offer it. So if this is not applicable to your situation, this is a step that you should skip. Otherwise, we'll just carry forward. Now, assuming that you do have this, then you need to plan out, obviously, what it is that you need to spend. So, again, these are things that aren't covered by your typical health insurance plan. So you may pay, let's say, $100 a month for your insurance, but you may have deductibles. And even outside of the deductibles, once they are met, usually insurances have a split coverage of, let's say, 80%, and that means you might pay the extra 20 until you meet a certain limit. We'll go through those in other parts of the book. And for these purposes now, you're going to need to go back and look like we've done with groceries and understand what you're paying for medical costs that aren't covered. So what we put here is a base grid that we took from the book, and you can use a grid like this yourself to find out, again, to get a good estimation of what it is you need to cover yourself for. So you can see that in this case we have, again, we talked about deductibles. So in this case, $200 would have to be met before anything else would even be covered on a split coverage cost. And you see copays for offices, prescriptions, contact lenses. Again, there's a host of things that you can be covered for, and we list them in the book. And certainly, what you want to do is look for what the employer tells you is covered under an FSA. Let's just say right here that we look and say, here's all of our costs, right? So this is good to go. So at this point, then you need to determine exactly what it is in terms of what your paycheck's going to be, because now you're adding a pre-tax vehicle. We know that Medicare is 1.25. We know that Social Security is 6.2. These are standard, so that gives you 7.65% no matter what out of your check. And you could have a state tax possibly, and you could have a city tax, and then there's federal. Federal will happen no matter what. So put a little example of a paycheck here, and you can see that we made a gross income of $31.77, and for example, this person's paycheck, which is Mr. Jasper, has a $31.77 gross income. He took out $100 pre-tax, and it left his taxable rate at $3,077. So what you're going to have to do is you're going to have to figure out what the percentages are. We know what this is, we know what this is, but this federal tax here, right, and state, and it could be again city, you're going to have to subtract your pre-tax first. His taxable income is $3,077, and then from there you need to take what was taken out, so it would be $239.23 or $276.93, and you divide that by this number here, and that gives you the percentage, and then you know what's coming out. So in this example we said right here that 7.77 was coming out of federal. So that's the rate you know is coming out, and that's what you need to work with, because what you're going to do is not only now take out this $100 for 401k, if this was your case, you're going to have to take out the number you came up with in your flexible spending account. So if we go back up here, so if we added all of this up, so we had 560, right? Plus we had 158, and we had 480, 1198. So if the math is correct, even if it's not, the point is that you have 1198 coming out, you would divide this by 12 and you come up with your monthly amount. Really, we're saying it's about $100. So let's just say it's $100 for your taxes. So you're going to take out $100 for 401k that's already there. Then you need to take out another $100. So you do 401k at 100, and then you do FSA at 100, and then you go the taxable income of the federal and the city if it exists, and the state, and then you derive your paycheck. So again, that'll give you a way to understand that your income is going to go down in your paycheck, but you're going to have more disposable income because you have created pre-tax income. So take your time, double check your math, make sure it's correct, and then put that new income into your worksheet. And then also, if you have any health expenses that are lined up in your budget, you won't necessarily need to list them anymore, because when you pay for them, they'll be taken out of a kind of a separate bank account, which is the FSA. But go further into that chapter to see a little more detail on all of that, how it works. you can certainly list the health costs and then also list the FSA in your budget under the income, and then you can cancel them out that way. So again, we'll go through those in the video exercise of running the budget template. At this point, just get the numbers down, and then you can decide what works for you down the road. Okay, so that's going to cover this chapter, and then we're going to get into exercise 9 DCAT for the Dependent Care Assistant account, which in most cases people use it for child care, but you can certainly use it for taking care of a dependent. And again, that's more pre-tax income if it applies to you. And so we will see you there, and thanks for joining.